The last couple of months have been really rough for most Chinese stocks. DOYU and HUYA took some massive losses, but both stocks found their bottoms and recovered a bit. Their earnings are coming up in a few weeks, so this is a great time to go over expectations and recent news. If you want to learn more, please smash that like button and stick around. Before I go into earnings expectations, I first want to talk about what is driving those expectations. At the end of August, the Chinese video game regulator announced that gaming time for children will be cut down to only 1 hour on Fridays, weekends and holidays. That came shortly after a Chinese state media outlet branded online games as the spiritual opium. If you're thinking, okay, kids won't be able to play as much now, so they're going to start watching streamers a lot more. Well, not really. China is also restricting the time and content that minors can consume on gaming and live streaming platforms and social media. Unfortunately, DOYU and HUYA will be directly affected. In addition, we've seen a lot of stricter data laws, especially around websites that are open to children. Obviously, these changes are going to hit DOYU and HUYA's revenue streams directly and immediately. But what is worse is the timeline. This is part of China's 10-year plan. 10 years! DOYU and HUYA will need to start rethinking their business model, as these changes are not temporary. In fact, they could get worse as time goes by. It's still unclear what impact this will have on their revenue, so we have to stay patient and watch the situation. Okay, now let's look at HUYA's earnings expectations. HUYA are expected to release earnings around the 9th of November, and analysts expect these to be horrible. Just 2 months ago, analysts expected an EPS of $0.63. Now they're expecting just $0.03, which is a massive reduction. 10 out of 10 analysts have reduced their earnings expectations for HUYA's next earnings, and 10 out of 11 analysts have reduced their revenue expectations. Overall, it's not a good look, but I think there is a silver lining to it. First, it looks like the expectations are so low that it will be easy for HUYA to hit them. Secondly, they are very much priced in, so even on a miss, it looks like the price can go much lower than the bottom at $7.56, which it hit at the start of October. But I'm not a financial advisor, so who knows. Still, I think there is plenty of fear in the markets, so even good news are not likely to move the price much in my opinion. Another reason behind scared investors is the fact that HUYA's chief financial officer resigned early last month as well, which is always suspicious and twice as much during volatile times. Then we have DOYU, who are expected to release earnings around the 19th of November. As I said, HUYA is expected to release their earnings more than a week before DOYU, so it is very likely that their earnings results will influence investor perceptions of DOYU. Still, it looks like investors are a bit more optimistic about DOYU than they are about HUYA. 2 out of 5 analysts have actually raised their earnings expectations for DOYU's next quarter, and 2 out of 6 have raised their revenue expectations. In fact, the consensus earnings for DOYU have gone up from minus $0.25 to minus $0.05, although it is still negative. The divide in analyst expectations means that there may be a bigger volatility once DOYU release their earnings, although, similarly to HUYA, I think investors are still a bit apprehensive about DOYU. Again, it looks like the risk is relatively low, as the company's all-time low is at $2.99, so the overall risk to reward ratio looks okay, but I would still be careful. Overall, both DOYU and HUYA remain cheap because a lot of fear and potential underperformance have been priced in. It's likely that the price of the stocks will stay low for a while, as a lot of the factors that drove the price down are still relevant. The situation hasn't changed. The new laws have been implemented. They are here to stay. It's hard to guess what can happen really, but I know that DOYU and HUYA need to think and act fast. We know both companies have had issues monetizing their platforms after the lockdowns ended, and the new regulations certainly did not help. This is precisely why the next few earnings calls will be crucial. If DOYU and HUYA can show that they have a workaround and a strategy to continue growing and expanding, I think the price will likely soar, just because both companies are extremely cheap. However, for that to happen, the management needs to deliver good results and good news. There are still over 2 weeks until DOYU and HUYA release earnings, so it's important to keep an eye on analyst expectations, as these can change over the days leading up to the release. Anyway, this was my take on DOYU and HUYA. What do you think? Let me know in the comments below. If this is your first time here, please like, share and subscribe. Thanks for watching and I'll talk to you again soon.